What's going on, family? Welcome back to the channel. We're going to have another amazing week this week. And to prepare for it, I'm going to get us all set up with the S&P 500, the NASDAQ or QQQ, our Russell 2000, which are our small cap companies or IWM. I'm going to make sure that you're equipped for this week to trade efficiently, to invest, to manage your portfolios. But before you do that, can you please hit me a like and subscribe? Maybe share this out with a friend if you've been here before. If you enjoy this video throughout, if it helps you, please do so after you hear the content. There'll be some links down below where you can download Webull and Robinhood and some other brokerages to get you some free shares. And as always, I want to make sure that if you need further information, if you need support in this skill set of trading and investing in the financial markets, then join our Discord as well. That link will be down in the description. All right. So all that being said, let's jump into this week's economic calendar, our earnings, and as well as our technical analysis, i.e. the charts. And whether you're a beginner, intermediate person, or you're advanced, we're all going to win here. And hopefully you get value from this video. All right, let's jump into everything we got going on. So we've got our economic calendar. All right, our economic calendar for this week. You shrink me a little bit here, make sure that we're good. All right, so our economic calendar this week is pretty heavy as far as data on Tuesday and Thursday. We've got some pretty big data here. Our core CPI right here in the middle at 8:30 Central Standard Time, Eastern Standard Time, 7:30 Central before the market opens. This is our consumer price index, the cost of goods that we as consumers are intaking every day. We're spending on groceries, we've got gas, all the expenditures that many of us consumers are wondering, when are those prices going to go down? So that data is going to be pretty important. Our last CPI report, okay, came in higher than expected. All right. So that pushed the market down. So we're going to see what happens, a reaction of the market this week with this core CPI data, and see if we react even further down, or we react positively and we bounce, or we react positively on the upside, for those that don't understand the bounce term. All right. So that's the first big data point that we have coming on Tuesday. For Monday, nothing scheduled here, as you see. So we should expect some low volume in the market. We should expect maybe a little bit of sideways movement, just some back and forth, maybe some relative strength names that may be pushing back and recovering from Friday's massive pullback. So we'll see what happens, all right, on Monday. So I do want to see, how we react, maybe trade a little bit on Monday, but keep it light, all right? Wait until Tuesday, that morning news, and then we can actually throw potentially some size in our trades, all right? Wednesday, again, nothing scheduled there. So we should see some continuation, some nice trading action carried over from Tuesday. Going into Thursday, we got retail sales. So I do have on the docket tonight, or whenever you're watching this, for some retail names that look really, really good on the charts. If you're more advanced or you've been doing this, you may know the names I'm talking about, or may have given away on the cover, all right, on the thumbnail. But U.S. retail sales should push our retail companies on the upside or the downside. Retail sales have been coming in pretty strong, so I'm liking it on the upside for our retail companies. Core PPI, all right, so producer price index, shows the the prices of our manufacturers, how much the goods and services are costing our producers of our goods. All right, so we'll see how that comes in. Typically, if CPI reacts a certain way, PPI will be very similar or the same. It's not always, but it's likely. That's how it came out last time, higher than expected, and we got two massive pullback days in our market. All right, Friday should be a really nice trading day as well. It is Friday, but pretty nice trading day there, because we'll have a nice reaction from our CPI and PPI data to carry us over into Friday, whether it's on the upside or the downside. All right. Very small, but very massive. Okay. That we should pay attention to, but this is next week. For next week, we have our FOMC interest rate decision day. Okay, this is when Federal Reserve Chairman Powell comes together with the presidents and the chairs. They come together at a round table and they make the massive decision on our interest rates, which we all are wondering when they're going to go up, when they're going to come down, when their rate cuts, when their rate hikes, are we pausing, all the things. All right. So that's going to be very important coming next week. So this week is a sentiment. Okay. It is a precursor to what next week could look like. Okay. Because CPI and PPI doesn't always, but is a good indicator for the Fed to determine whether we should hike rates or whether we should cut rates, pause them, whatever it might be. All right. So far, we've gotten some pretty decent data where the Fed has been looking at, cutting those rates sooner than expected early summer, but we don't know, right? It's up in the air until they actually decide. So that's going to be very important this week and then headed into next week. All right. So there is our fundamental economic report. Now let's go into Google Finance here, and let's look at how we performed last week on our indexes. Okay, so let's do the S&P. Let's look at the comparison to our Dow, our NASDAQ, our Russell, and then let's look at the Dow. Okay. So last 5 days, we could see the S&P was down 0.15%, okay, or roughly about 7 points. Not much there, but we did have a massive sell going into Friday. So the overall week was just slightly down, okay, so pretty much broke even for the week in the S&P, but that was a sentiment probably coming into this week. Didn't want to carry trades or positions over into heavy data weeks. Okay. Our NASDAQ, our tech index here, a little bit heavier there, pulling back about almost 1.5% roughly. Russell, our small cap companies, okay, roughly just behind the S&P. So we did have a red week across all of our indices. So that's something to pay attention to. But as a reminder, if this is your first time here, all right, we go to the month and we go to year to date. Okay. Year to date, we are still bullish. Okay? As you can see there, still bullish, up 8% on the S&P, almost 9% on our tech index, the NASDAQ, Russell 2000, almost 4%, 3.5% there. Dow Jones lagging behind there, which is actually interesting. Some of the Dow Jones companies that we're going to be talking about tonight is very, very interesting for the Dow, as it's a little bit lagging behind year to date, which could be a good thing as those companies could, really push to the upside. All right. Let's jump into our earnings. Okay. Our earnings. And as you see here, this is our community. If you're not inside of Leverage Club, that's the first link or second link, one of the links down below. It's our investment group or our life, business, and financial group here for those that want to get further support. All right. So I come into here, our trading floor, and I'm looking at our earnings calendar. And as you see, I'm posting news for our community and our earnings. So notable earnings to pay attention to. Oracle, pretty interesting there. Should get some nice volume on Oracle for potentially a lotto. Okay. A LOTTO, a lottery trade before earnings could pay off massively to the upside. So potentially could consider an options trade entering in before Oracle earnings. However, the optimal gold standard way of trading earnings is post earnings. Okay, so you should get a nice post earnings setup or a trading scenario, trading setup after Oracle reports. Should get some nice volume, some volatility. So that could be a nice trade there before and after Oracle's earnings. Okay, some other notable mentions here. I like to throw out some that are very interesting. Purple here, the mattress company, not really, but interested. Okay, interested there as far as just curious, not really looking to trade it. UPath, okay, Kathy Woods, ARK investment here, so UPath could be interesting. Sentinel-1, the cybersecurity space there. Dollar General, always really good. Adobe, I don't know how I missed that when I was doing the live one earlier, but Adobe, Dollar General, Dix, and then Ulta. Okay, Ulta. Those are my notable mentions. If you do see any others on here that you are interested in personally, my way of trading earnings is a little bit different. Okay, so if you're new here, trading earnings, day trading, or trading options more specifically on earnings, we need volume, okay, volatility, okay. So that means we need fast, we need a lot of buyers and sellers moving throughout that particular company to be able to trade options or day trade it. So that is why I'm throwing out those companies, because those companies typically have a lot of volume, volatility on their trading intraday or intra-week. Okay. So that is why I'm throwing out only those. So if you see some of the other companies that you're like, ooh, what about this? What about this? What about this? They might be good to invest shares in, or you might be interested in them yourself for share opportunities, or just looking at them to see how they report. Okay. So maybe I'll make a different video over how to do a full analysis over a company, not here in our market analysis of how to assess financials, if they're profitable, and if they have room to the upside, or if they are a failing company. All right. So let me know down in the comments if you want me to do a video like that over how to analyze a company, and whether you potentially, for your own sake, should invest into it, should cut your losses, whatever it might be. All right. There's our earnings. Let's jump into the fun part, which is where the money's made, our charts, our charts, our charts, our charts. So I've got the S&P 500 SPY pulled up here. All right. So let's look at this. We did have a massive, let's look at it on the weekly first. Okay. So as a reminder, we are still bullish. Okay. Still bullish here on the overall weekly chart of SPY or the S&P. We've had 3 red weeks. Okay, 3 red weeks. But every time we had a red week, we followed that red week by another leg up. Okay, red week, another leg higher. Red week, potentially another leg higher to 521, 522, 523. Okay, and then that psychological level of 525. So I could definitely see that potentially happening, right? So we've got some key data, as you saw earlier, of how that could happen. So if CPI and PPI come out, how they come out, whether it's higher than expected, the market comes down, or it comes in as expected and the market just rips back up, right? So we are still in an overall bull market, and we need to pay attention to that. We do have FOMC next week. So we could see a little bit of consolidation. We could see a little bit of sideways movement. And all that means is that people are just kind of holding on to their positions. They don't want to sell out. They don't want to panic sell, but they're just kind of watching and waiting to see what we may do. All right. So this is an interesting, could be an interesting week, could be a really good week, make a lot of money. But also we got to make sure that we are patient. We find our entry points. We find where we want to take the trade. But I am looking overall for a bullish sentiment. Okay. This little red sell off on Friday, we've seen those before and they get bought right back up. Little sell off here or natural pullback, bought back up. Here's one. Here's last CPI and PPI. CPI, okay, bought back up. CPI, bought back up. All right. So that is what I'm looking for a reaction there on the data. Okay. We could pull back. So here are levels on SPY. I want to watch 410. It's already sitting at 411. I want to watch this 410 area here to see if we maybe go from 410 and bounce right back up to 414 and see how it react at that 410 level. Okay. So I want to watch that. If we hold up 410, and potentially take calls off of that level there. All right. Now, this daily candle here from Friday is pretty massive. Okay. So that selling pressure could continue lower into this 507 area. All right. So that 507 we've been reacting pretty strongly off of. So I want to watch this 507 for our next level. The lower, the better. Personally, I'd rather be a little bit more patient to see how we react, because I don't want to take a bounce too early here, right? But I will if we react positively. But I still don't like this this area all the way up in here of supply or very heavy selling. Okay. Another signal here for my For my people that like formations, okay, for anyone that likes formations, chart formations, this could look like a nice potential head and shoulders here to come lower. Okay. So I am watching that as well for a potential nice little recovery, right? Off this 508 maybe, and then push back up into highs. And then right before, PPI, CPI, or FOMC, whatever it might be, we react off that 514 and then we come lower to that 503, 504 level. Okay. So you can see there, turn it blue, make it a little thicker there. So that is something that I'm paying attention to as well. We could react positively and then come lower before FOMC. All right. So that is a trade idea. Doesn't mean it's going to happen, right? But it's something I'm watching for. So I am watching for a recovery, then potentially pushing lower, depending on how the news comes in. All right. Here's another scenario. We could just rip off this 508 area, double bottom, build, and then just rip back up. Okay, that's a scenario trade idea as well. Okay, so wherever we start to settle in, I'm really not looking to play or trade puts. Okay, where you can make money on the downside for my new people. Okay, so I'm really not looking to trade any puts necessarily unless we get back up into these rejection zones. I probably wouldn't even play puts until we get back up in this 521 or so, because that was an ideal put scenario. Maybe at this 514, right? If we start to see some rejections here, but we've had a massive sell here. I believe buyers are going to step back in pretty aggressively wherever we decide to settle in. All right. So trying to find these areas of demand where we settle in, either 510 or this 507 area. And ultimately, we need a big catalyst to come down to fill this gap into this 501. All right. We go over the SPX. If we come over to SPX here, and interesting enough, we already see the NASDAQ and the S&P futures already reacting positively. So if you can see here, we've already got ES, okay, our S&P futures already kind of reacting a little positively here. We've already got NQ reacting a little positively right here in after hours. So I am interested in that upside. If you see, it's already reacting a little positively to come back up into these highs. So yeah, it could play out pretty nicely here for a nice bounce right off open to start off the Monday. Okay. For QQQ. See, we got some nice levels here on QQQ. We came up into this 446, pushed up into 448, and then we rejected at this 442, which was a nice support as we just formed really nicely. I personally like QQQ's chart. I think it's very clean, running really nicely here. So what I'm looking for on QQQ is this 437 area. Okay, I want to hold up this 437 area for a nice bounce here at 437, 436, maybe a nice bounce, shake out some sellers there, recover, and then form really nicely. So shake out, start building, and then come right back up to 442. Okay, so I can see that. We're just pushing right back down into these demand zones. Okay, 437. The line in the sand, okay, for whatever reason, I think we personally need a catalyst. I think buyers are going to hold up this area pretty well here on QQQ because sellers definitely took over here. So 433, if you look here on these, on the daily, we've got a nice gap fill past this 433 area. So buyers can't really hold up this 437, right? It could get pretty aggressive. Maybe I'll put it down to this, candle close there. I like give it a little bit of room. 436. So if buyers can't hold up this 436, it could get pretty aggressive down here in this 433. And if you see here, for whatever reason, I think we personally need a catalyst, right? We got to have CPI or something come in really, really bad for us to, potentially fill this gap all the way down here into 425 and maybe even to 421 down here at this demand. So just keep a watch out on for that. Got 436, 437 demand zone on QQQ. We're about $2 away in after hours. And then look for 433 to hold up as well. Okay. Here's what it would look like right there. Little shakeout, right? We'll see how we look in the pre-market and then recover all the way back up here into these next levels, 442, 446 highs. All right. Cool. Good there. IWM, small cap companies. And then I'll go into some of the plays I like for the week. And then we'll get you out of here. IWM. Okay. Still strong overall. We saw the IWM push really nicely up into here out of this range. It was in for a couple years here. I'm going on monthly so you can see. All right, so you see this nice range from 197 all the way to 163, finally broke out. Okay, formed a nice bull flag, retest, and just kind of pushing new highs. The levels I like on IWM personally, I like the 203 level, 203.50. If you want to round it to a nice even number, 203. Okay, 203, 203.50. Even 204 is a nice level of demand there that it's been holding up. 204.50. Okay, this nice high here, but the lower the better, right? But IWM personally still looks very, very strong. It is up in a little bit of a supply in this 210, 212 area. But if we could see IWM react pretty positively, potentially off the interest rate news, CPI, PPI, we could see IWM essentially just react pretty nicely there. And I apologize for my drawings, but you can see here for my people, typically it is a nice little double bottom or an inverse head and shoulders to retest the high. Okay. So looking for IWM bounce to 203, 204, hold that level, and then just retest these highs, 208, 210, ultimately 212. And then we're off to the races. Okay. So there's IWM. Okay. I'm going to take a break for a second from our 3 indices. If you're enjoying this content, go ahead and hit me a like and a subscribe. Share this out with a friend. Comment down below maybe where you're from. I'd love to connect with you personally. Check those links down below. Join our Discord. If you're new here, right? If this all is making no sense, if I'm talking too fast, if you're like, I don't know what a bounce is, I don't know what any of this stuff is, go ahead and check the links down below, right? I believe it's $27 to join our chat for our live trading sector, $97, right? We're making that in a day. You can make that easily in a month. I'm just asking for it for a month just to give a little bit of a time where my time is valued. And ultimately, I know that you're serious. So I'd love to see that down below and you joining us inside of Leverage Club, our Leverage University, all of our materials there. So just want to take a brief break after our indices because I know that this can be overwhelming, but I want to make sure that you are equipped and ready to go because once you understand this stuff and you know what a bounce is, what you know what a break and a retest is, all those things, I guarantee you that you are going to see the opportunity in the financial markets, especially if for whatever reason, job is lost, we go into a pandemic again, something happens, and all you have is internet connection and your savings or a little bit of money for you to produce income. All right. So let's continue into it. Let's go to a couple of my favorite companies. I'm going to start with some quote unquote slower movers, but let's start with the retail sector. Okay. So one of my favorite setups right now is Nike. Okay. Nike's got earnings coming up in a couple of weeks. Okay. So 321. A couple of things I like on Nike. Let me turn on this RSI here. Okay. I like that Nike has reached a very solid demand level at 96. Okay. We can see here 96, 96, 97, right? Held there, bounced, reacted positively, went back all the way to 123. Here's another level 96, 97, went all the way back up to 116. Okay. Dipped a little bit lower below this 97 level. Okay. And then we went down to 80, but that was in a bear market there in October. So that was a little bit different scenario. We were in a bull market. Okay. Dip down below a little bit here. This is our September's kind of sell off, inverse head and shoulders right there. But still, look at this level at around 96, 97. Look at where we are sitting yet again, right? leading into their earnings. Okay, so I like this candle here on a daily. You can look at it as maybe a hammer candle. Okay, so for those that are unfamiliar, I want to make sure everyone feels all inclusive. Hammer candle stick. Okay, so it's a bullish candlestick. And it typically looks like this, right? So long wick at the bottom, nice solid close. And it doesn't always have to be without a wick at the top. You can see here that there's a hammer there, right? It could be an inside hammer, right? There's a hammer there. So long candlestick at the bottom. All right. So if we look here, it's not exact necessarily on a daily, but I believe I come into that weekly. I do like that wick off of there. Okay, I like that wick off of there, even though it's a red candle, right? Still, you can have a red candle. It can still form a hammer on a weekly. Then I like kind of that formation there. 2 consecutive green days from Nike. So I like that it's basing off of this level. So it's giving me 2 solid days to confirm that this 97 level is holding up. Okay. Now, where is it trying to head? Ultimately, back up into this 101, maybe 102 area, 101.50. Okay. So this was a previous. Okay. Very simple. Okay. Previous support. Okay. If I look to my left, look at this reaction off of 101, 102. Okay. Bounced off of there, went to right to 106. Now it's broken down under there. And now that area becomes resistance. Okay. So if I turn that red, so now I want that to break above that area. And then it's got nothing but room to retest that high 107. Okay. Retest that high. So that's why I have these levels here. Okay. So I've got roughly 102, 102, 104, and then ultimately 107. Okay. 102, 104, and 107. All right. So like Nike, I like for calls. Okay. So this week I'd come into my options chain. And personally with Nike, I like to stay in the money. You could day trade it as a weekly, but with a solid setup like this that I like off of very, very strong demand or support area, I personally like to come out further out. Personally like to come out further. Personally like to come out further. Maybe 40 days out. You could look at Nike and just swing trade it there if you'd like. Okay. 105 calls, 100 calls, anywhere in the money. Even 110s aren't bad because we know the levels it wants to go to. 104, then 107, and then ultimately that 110 plus if it kills its earnings and knocks it out. All right. You see this major gap fill with Nike as well, back up to this 120. And I do believe that, they will fill this gap if their earnings just absolutely kill it. Okay. So it's a long way to go from 100 to 120, but it is possible with Nike with that earnings catalyst plus this nice demand bounce and just forming back up here. Okay. So look for Nike for calls this week. Yeah, I like it. I like it. All right, let's go into Target. Target levels on Target. We a little bit overextended on the RSI here at about 73 on a daily. On a weekly, still overextended a little bit. On a monthly, we have not even reached 70 yet on a monthly. So month's not over. We could see a little bit of retraction here on Target potentially, and it's already doing it a little bit, right? So I like Target holding up this 67 ultimately, right? Where it bounced right here, but it is kind of forming into this nice wedge here. I like Target better reclaiming 170, ultimately 172. Okay, so if it can start bull flagging out of here, out of this wedge, okay, reclaiming that 172, then I like it to retest that high of 175, ultimately 176, and I think it's off to the races. And I'll show you the gap fill on Target that pops up there. Okay, so above these highs here on Target 176, we're off to the races in the middle of the gap fill. Now, it's not going to do this in one day, right? To 175 to 198, but we are looking pretty nice on the upside if we bounce right here. off 167, reclaim a 170, hold that 170, and then retrace the high and take out those highs. Okay. So I do like target for long calls personally. So again, I'd come out further 175 calls. You can look at a little bit out of the money if you want to. You trade your plan. Again, if you need support, Discord link is down below. Okay. If you want to day trade it, can look at it this week if you'd like. You can look at the 170s or 175s. Those will be for intraday trades. We do have a lot of data this week. So this setup I like so much on the long side. If it holds up those levels, that I'd probably just want to go further out and not even worry about doing weekly. If you want to day trade it and swing trade it, you're more than welcome. Okay. So target, I like that setup for calls. Okay. Let's look at Walmart's very interesting as well. And why I'm looking at the retail companies is because I'm looking at them because we have those US retail sales reports on Thursday. Okay. So those US retail sales reports. So we could, push down, and then because our retail sales reports have been so good over the past couple of reports, there could be some bullish sentiment, right? Could be some bullish sentiment off of that good data that could be coming for those US retail sales reports. All right. So that's why I'm looking at the retail sector pretty heavily this week. And the charts look really good as well without even the report being a catalyst. So, Walmart, I like Walmart on the upside. Personally, I like that it broke above the 60 level and it's closed above 60. So Walmart could see it tick down below 60 again. So I'd like for it to tick down below here. I like it with these companies that have 50-cent moves to $1 moves, that their contracts move very, very well. It can get very particular. So personally, I like for it to just reclaim 60, right? You could catch it on a bounce at 59.20, 59.50, but I personally rather like to see it bounce and then start reclaiming, and then I can always catch it, reclaiming 60. Okay. Ultimately wants to reclaim the highs here. So trying to time a bounce down here could be a little bit more difficult, but you could try it if you want. Anywhere in the 59s, maybe tick down in the 58. Very similar to this. It would look like this. Okay. All right. Pulls down 58, gets bought right back up and comes right back up to 60. All right. So that's how that wick shakeout would look. So a little bit wicky there for me, but that's why on a company like this, Walmart, solid company, obviously killing it, had a stock split, a lot of good bullish nature here. So yeah, I like it. Options, longs, I'd probably take it 40 days out. Come here, look at maybe the 60 calls all the way out until April 19th. Okay, you could look at it further if you want. That June date has been looking really good for calls, right? 60 calls all the way out till June. So good look at that. All right, keep it in the money for Walmart. I wouldn't go any further out. Maybe 65s if you have, further time on the contract. I would not do 65s personally at $2 right here for a weekly. So yeah, look at those 60 calls further out for at least 2 weeks out. Okay. There's Walmart. Let's look at let's go to our tech companies. All right. Let's go to our tech companies. Those are retail. Let's go to tech. Apple. Okay. Apple's been on everybody's radar here. Let me just type it in. All right. Apple's very interesting. It's been taking a nosedive, and it's healthy, right? It's fine. But the concern with Apple, right, is this trend line that's been broken. Okay, so you see this uptrend that we had on a weekly, right? There's one touch, there's two touch, and then this third touch tried to hold this 180 level and couldn't hold that 180. Now 180 has become resistance, right? So we have now trended down into these new lows, but we're coming back down into this demand area of about 165. It's trying to hold up this 170, but it gets a little bit, shaky in this area because it bounced here at 170 and went back all the way back up to highs. Here it ticked down into 165, and this was, in October, right? And then it went back to highs. So anywhere in this range, I like the wicks. Obviously, there's buyers stepping in here, very similar to this, went all the way back up to 181. So I would not try to short this. Obviously, it's Apple, right? We are trying to find a base on Apple. So, I like the wick there on the weekly. On the daily, not a fan of this, big wick here personally. A lot of sellers still shorting here. So, not a fan of the daily. That's why it gets a little bit tricky. And then Apple here on the 4 hour, you could look at this as a, inverse head and shoulders, maybe. Right? It's a little ugly personally, but you could look at that as a bullish inverse head and shoulders right there on Apple. Okay, if you see that. So if I were taking a calculated, I don't like to use the word gamble, um, calculated trade on Apple, the stop loss right below 68. I mean, your stop loss is established here. So a trade idea could be, stop loss right at, 69 if you want to keep it really tight, right at 69. Holding up 170, keep your stop loss right at 69. Or you could wait for an entry at 69, keep your stop loss at 67. It's a $1 stop. The risk to reward is definitely on the upside. So I'd look for this kind of trade on Apple, a long position here. All right. Entry there. It'd probably be off open, to be honest with you, if we get a nice bounce on SPY, right? And there will be the trade idea there, right? Stop loss right there at 69, hold up this 70, retrace back to 73, and then maybe taking out that 75 area there as a psychological level, and then breaking back up all the way up to 180. So I definitely could see that personally, but that 73 to 74 area that I have this yellow caution zone in, we got a pretty big rejection there on Friday. So just want to be a little bit cautious there. Okay. So it'll be a short trade on Apple, but if you want to take it long, if you're very, very bullish on Apple, obviously, right, you could just dollar cost average when it comes to trading options into a longer position. Okay. So you could come out 40 days out. You could look at Apple 180 calls. If you're very, very bullish, if it dips down, buy another one, right? You could just dollar cost average into your Apple 180 calls if you do believe Apple is going to recover pretty nicely. All right. If you are extremely bullish on Apple, which most of us, I believe, are, Apple still has a lot of strength. The only reason why they're taking a hit is because they just have not been as innovative in their AI space. Okay. They had the news about cutting back on the electric car, which got people hyped, the Apple car. And that was going to put reins back into Tesla and whatnot in the EV space, but they haven't really, other than the Apple Vision Pros, where it's a little bit early. People liked it; it was very hyped. But I've heard personally, right, a lot of returns, and a lot of people just playing around. Very similar to the iPad, right? It's useful, but you may just play games or use it as a entertainment type of device and whatnot. So their AI space and their innovation has got to get a little bit they just got to push the needle a little bit more. They've got to convince investors that they are on the cutting edge, which as Apple, they got some coming. All right. This is a great share buying opportunity as well. Obviously not financial advice, but great share buying opportunity. So if you're picking up shares here, great opportunity to pick up some shares on Apple, fractional or whole share opportunities. All right. There's Apple, Tesla. Jump into Tesla, and I'll cover the semis, the semiconductors, NVIDIA, AMD. Tesla, personally, still on a downtrend. Okay. You can see here that Tesla is still forming lower highs and then lower lows, and form this nice bear flag here that we talked about last week. All right. So Tesla, personally, I like it at 165, 164. Okay. This area down here into this demand, I personally think with this massive selling volume candle that we have closed Okay, we closed right at that 175 on Friday. So that's very intriguing. But after hours, you can see that we're still pushing lows below 175. So there's still a lot of sellers present at each and every one of these areas. Okay, so 178 could be another rejection point for Tesla again. Okay, but great. Again, like Apple, Tesla has a lot of cash flow. They are, obviously taking a hit right now, but there are definitely people loading up on Tesla shares and potentially long dated call options, just waiting for that spurt, just waiting for that recovery where we get that nice bullish candle, very similar to this right here on Tesla. And then it just recovers. And we know that we're back on that bullish nature. Okay. So my recommendation, okay, suggestion, you can pick up shares here anywhere in this zone, buying opportunity. As far as call options or trying to time the bottom on Tesla, each and every day is different, right? You got to remind yourself that the pressure is still on the downside. So just be mindful that it could get rejected again, come lower down into the 160s, break 170, come back in the low, 160s. Okay. So watch for that break of 172. If we can't hold that, then obviously, we got more downside into the 165s. Okay. 164, 165. All right. So I like the Tesla short, to be honest with you. I like the Tesla short. I like that rejection there off 183. Tried to recover there. Big selling pressure. So I do like a Tesla short down into these lows. If we get weak in the market, that's a catalyst with Tesla. All right. There's Tesla. All right. Let's jump into, let's jump around a little bit. Okay. Let's jump back to retail really quick. Shopify has been on my list. Okay. Shopify is very interesting here because push right down into this demand zone around 73. Okay. Pushing that demand zone of 73. Okay. And reacted very nicely out of this falling wedge here with retail sales coming in pretty strong. We bounced really nicely out of here. And all we're doing is coming back to retest. So I want to see if we hold up this 75 area on Shopify. I'm just not a fan of that huge wick there. So we could come lower, but I want to see if we hold up this 75 area, start basing above 75, and then taking it back up to highs. Okay. So watch out for Shopify. I do like the break out of this wedge and maybe a little retest of the wedge at 75. And then we react positively there to take it back up. Okay. So that's what I'm looking for on Shopify. Okay. So Shopify calls. All right. Let's jump into Palantir. Been bullish on Palantir, below $10 ever since it was below $10. Was accumulating shares in this accumulation phase. It's now in the public participation phase where people are jumping in a little bit late, but hey, it's getting some buzz. It did have really nice news sentiment. If you weren't familiar, first of all, they got a price target increase. Okay, that was very nice. And also they secured a US, where is it? Yep. US Army contract. Okay. So if you're not familiar with Palantir, do your due diligence, but they achieved that US Army contract, which was very, very nice bullish move here on Palantir. So now what are we looking for? I'm looking for a nice retest of 25. Okay. 25, 25.50. If we can maybe tick down just below 25, shake out those sellers that want to sell, or push Palantir down even lower. But Palantir's price target right now, short-term price target for me is $30. Okay. $30, $31 is a short-term price target. I've got it up here. Let's look at it on a weekly. Okay. So 28.50 to 29. If we get up to here, I do believe personally we're just going to squeeze into that 30. Okay. So Palantir looks great for a long opportunity here with that catalyst, nice volume on it. It is trending pretty nicely. You can see here on active high volume stocks here. We've got Palantir sitting right here, pretty high on the list. Market cap 57 1.6 billion, volume sitting at 84 million. So pretty high there on the list. Okay. So are we looking for calls on Palantir? Could be short-term calls here, maybe 27 for weeklies. If you like to day trade, those could be really nice to trade intra-week. Okay. If you like long-dated call options, again, I'd come out to maybe this April 14th date. I'd look at these 27 calls. If you have a smaller account and you can't spend 150 bucks or whatnot, I would look at these 30 calls at 74 bucks. Okay. Now, the price of these contracts aren't going to be the same, maybe when you see them or when you see this video. So just, hey, if you're not trading or you're not comfortable with this, you're able to paper trade, right? Or you potentially can just watch the contract accrue and you're like, hey, Dr. B said, man, this contract used to be $74. Dr. B, this contract is now $100. Exactly. So if you would have entered at 70 something dollars, then you would have made 30 bucks profit. Okay. That's the gist. So if you're not comfortable with this, again, watch what I'm saying and start to see it play out in your mind and start to, maybe trade or paper trade, and then you get in the game. All right. So that's what I'm looking at for Palantir. All right, let's look at a couple others. I'm trying to make sure before I go into the semiconductors. Google's very interesting. Let's look at Google. Okay. Google's very similar to Apple. Okay. I like the bounce off Google off this 130. Okay. However, I personally like it back in this 129. Again, this wick. Okay? Again, this long wick here had a nice recovery, but we're still not out of the water just yet. Okay. So I want to pay attention. You want to pay attention that even if it's a green candle, remember those wicks, how long that is. That means a lot of selling pressure, right? So I want to pay attention to that there's sellers still present here that may want to push Google down a little bit lower to buy it down in this 126, 129 range. Okay. So that's really where I wanted Google personally. And we could get it. We could get it. So that is the big buying opportunity for Google that I like. It's down this 127, 129 range, maybe even to 126. Okay. Now, how would we get there on Google? Okay. What would you do intra week? Okay. Intra week. And you can see here, if we go into the 20-minute, maybe even, the 4 hour, it's not crazy to think why Google's not out of the water. Look at this. Former support turned into resistance. Okay. So Google rejected that 178, which could push you back to retest these lows again to 130. So we potentially could have another retest and then lower. Now, if we break above 140, it could get interesting. Okay. So I like Google really above that 140, but we still got so many lower highs here. But if we get above this 140, personally, I think we've got some serious upside. So look at that for Google. Calls I like better above 140, or just wait for this retest of, just below 130 for more confident calls there. All right. There's Google. Let's jump into covered Tesla, AMD. Jump into Netflix really quick. All right. Netflix is holding up very, very well, even with that massive sell that we had on SPY, QQQ, and IWM. Okay, so Netflix levels. Okay, I want to see it hold up 605. So it's already kind of bull flagging pre-market. So 605 is that area. I do like it because it's been holding up relatively strong comparative to the market. So Netflix 205. I've got Netflix retesting these highs of 625. Then ultimately, I've got a measured move. Okay, this measured move leg on Netflix coming from their earnings. Okay, and matching that measured move all the way up to 650. Okay, so it's just bull flagging. I mean, look at it right here. It's just nice bull flag to retest that high, to take out the high, to come up to 650. And if you look at Netflix, I mean, it's got highs back up to 700. So this chart right here is just simply retesting that high, trying to take out that 700. Okay, so I really like Netflix for longs personally. It looks really, really good. All right, so contracts again. You could do, they're pretty pricey for those with smaller accounts. So just be mindful of that. Um, Netflix 650s could move if you have a smaller account. But again, I like in the monies, 610s, 620s, anything around there. But you can see the price of these, pretty pricey. Okay. If you want to take a little bit of a quote unquote bet, gamble on Netflix to retest those highs, yes, you come out here to these 700s and look at those uh, about 600 bucks, right? And it gives you 40 days. All right, so there's Netflix. Let's jump into the semis and then I'll get us out of here. Semiconductors. Everyone's actually, let's look at Meta, more tech companies really quick. Meta has been relatively strong as well. Okay, Meta, relatively strong. I want to see if we could hold up this 500 psychological level. Okay, can we hold 500, 498? Okay, 498, 500 is a very key level. If we can hold that, then we'll just retest the high back up to 520. Okay, 523, and then taking out that high. Okay, so we're already reacting pretty positively here at that 500. Bulls trying to hold that level up, but I'd love to see it, retest, take out 508, and then retest the high. Okay, I like it a little bit better if we fall below there to 488. That could be a really nice bounce. Okay, so if we get a little bit weak, come back there, double bottom, take it back up. Okay. All right. So there's Meta for calls off those levels. Okay. So if you have your charts or if you're just watching, you can see there. Right? AMD, AMD, and NVIDIA. I'll cover that since everyone wants to talk about NVIDIA, most people. AMD and the semiconductors have been just on an absolute tear. So I'm personally going to be patient with this. I want to see where it settles in because it's a massive sell candle. Um, we played calls on Friday, and then the sellers took over, right, leading into the weekend. So I want to see AMD hold up. I want to see how we react off this 197, 196 area right in here. We come down into there personally. I think it's just pretty massive here. 205 could hold up, but I think buyers want to bring it back down into this 197 and take it back off of there. Okay. So I'm looking for that 197 area, just being a little bit patient with the massive sell candle coming in off of AMD. So we hold up 205. Great. We get pushed right back into 211. Reclaim of 211. Then we'll probably push back into these highs and create new highs. All right. For whatever reason, we get really weak. Yes, we still have this retest all the way back down to 195. There's a level there where we reacted there, but we still have all the way back here to this 185. Okay, so those are the levels. Be patient on this week. I know it's hyped with the semiconductors, but hey, they had a nice run, and we could see some more taking profit, people getting out of their position, whatever it might be. Okay, some fear in the market. Nvidia. Okay, we may get that Nvidia bounce yet again. Personally, I don't think that Nvidia will stay down much longer. This area right here of 823, 820, 830, anywhere in this 830 range. We got about 20 more dollars to go. We could see some buyers just coming in anywhere. I mean, we can get a big wick pretty quickly. Okay, very similar to what happened here. And see there, I mean, it was just a zone. Right, immediately $30, $30 wick. So it could happen again on Nvidia. I mean, I know there's a lot of people in their sell positions on Nvidia. People top ticked this and made a lot of money, but I do believe that their take profit will be very very soon in big money coming back down here, and it gets swept right in this area around 830, 827, anywhere in this green zone. Okay, it's hard to time the beast exactly. Okay, so be mindful of this. It's pretty aggressive. Okay, if you can see here, but we are coming in back into a demand zone. Right, so I am looking for potentially NVIDIA calls. Now, obviously, these are pricey for a weekly, but 1,000 calls have been moving very, very nicely. Okay. So we could look at the price of these when they open up. I do believe they're going to be a little bit cheaper personally. We'll see. But 1,000 calls, maybe 1,100, 1,200 calls definitely move as well. Okay. If you want to come out 2 weeks, right? The 1,000s, 1,200s, those are moving. So if you don't have a massive account or whatnot, I know it's significantly out of the money, but they move. Okay. If you know, you know. All right. So that's what I'm looking for in the video. Okay. I'll keep it short and sweet. I think that's pretty much it. Finance, keep an eye on finance. It's been pretty strong, to be honest with you. Bank of America, Wells Fargo, those weekly charts look amazing. Okay. Those weekly charts look amazing. So keep an eye on finance. Bank of America, I like even better because it's bull flagging really nicely to take out these highs, 37 and then ultimately 47. So obviously, interest rates decisions will impact this, but based off of what's been said, I mean this chart looks amazing on Bank of America. So keep a lookout for that. Charles Schwab also looks like a really nice bull flag. Okay, you can see here it's a nice bull flag, but it is coming into these lower highs. It's got to break out of this range, but I do like it personally. So Charles Schwab breaking above 72, breaking above 72, sitting right now at 67. We could get a bounce. I mean, it's not as clean with this, but yeah, anywhere in the 65 range, maybe. Okay. Sitting right now at 67, we could see a nice retest here, 65, and then take out that high. But again, it's sitting on this trend line at the highs. Okay, so just keep a lookout for that chart. Um, Covered Nike, covered. Yeah, that's pretty much it. I'll go over crypto really quick, just very briefly. Bitcoin still pushing new highs here, still forming nice wicks, candles, nice hammer candles there, just still holding up, right? Look at that. Just wicks, every dip getting bought up. You can see this trend line here creating higher lows and then creating still higher highs, right? So we could see a nice reaction off of Coinbase in the morning potentially, and it could just rip back to highs, take out that high 270, and then just going all the way up to 295 on Coinbase. So Coinbase has just been absolutely on a tear, and I don't think it's done personally. So I'm not going to go over all of crypto, but yeah, just keep a lookout. Crypto is just absolutely bullish. Bitcoin still holding up, wants to maybe take out the 70 and then push to 72, 73. And then maybe we get a little bit of cool off. But until then, it's not cooling off right now, but just be very cautious about buying Bitcoin at these highs. You can average in, but personally, it is sitting at highs. So you're paying a premium. So wait for the next Bitcoin pullback, even if it's slight. Even if it's back down here at this gap fill at 64, maybe 60 even. If we get that, personally, we could get a massive dump right before the halving like we did last time. And we come all the way back here to potentially 30, right? 50. Who knows? Who knows? So still haven't had a retest of this level. So I could see maybe 48 to 50, right? Come back here and then rip, right? Very similar to this movement. All right. So don't be surprised if we have some kind of candle like this. Ironically, look at this. April, May. Very ironic. So could be setting up for something. All right. Well, all that being said, thank y'all so much. Hopefully this provided you some value. You got something from it. You learned something. Didn't want to go over every single play in my playbook, but hopefully some of these you will take advantage of this week or watch, whatever it might be. Don't belabor the point. Click the links down below. Until next time, peace, love, and blessings.